Good morning to everyone, or good afternoon, depending from where you're logging in. Nicholas Bornos of Capital Link, I would like to welcome you to the third day of our New York Maritime Forum. This is the first panel of the day, right after the opening keynote remarks of the Lieutenant Governor of the state of New York. And we are starting with the LPG sector panel. I'm delighted that we have with us industry leaders from all over the world. Actually, the digital feature of our event allows us to have people from different locations. So I'm delighted to have with us Anders, Charles, and Ted. Thank you for joining. And I will turn the floor over to Greg Wasikowski of Weber Research to moderate. Thank you again very much for your participation.
All right, thank you very much, Nicholas. Good morning, everyone, or like you said, good afternoon if you're in Europe. My name is Greg Wasikowski, Associate Partner at Weber Research and Advisory in New York City. I will be your moderator for the duration of the session. It'll go to approximately 9:40 a.m. Eastern Time. With me today are three outstanding panelists, each with more experience in their pinky nails than I have in my whole body. But in all seriousness, it is truly my pleasure to introduce today's panelists. First, we have Mr. Anders Onarheim, CEO of BWLPG. We have Ted Young, CFO of Dorian LPG. And finally, Charles Maltby, CEO of BWEK or BWEK. We're going to get things going in a moment, but before we do, let's have the panelists give a brief overview of their companies, their background, their fleets, etc. Anders, let's start with you, and then Ted and Charles, you can follow. Take it away, guys, and keep it 30 seconds to a minute or less if you can.
Thank you, Greg. Good morning in New York. I have been the CEO since December 2019, so not that long, Greg. But I've also been on the board director since the listing in 2013, and I've known the company for many years before that. BWLPG, we're the world's largest owner and operator of VLGCs. We have 42 ships on water at the moment. We're a return-focused company, and we try to be counter-cyclical in our investment approach. Today, we have 10 ships on water with the latest technology, the dual-fuel LPG engines, and we have 5 more coming on stream soon. So with that, I will leave it to you, Ted.
Thanks, Anders. Ted Young, CFO of Dorian LPG. Been with the company, Dorian LPG for a little over 8 years now. We are New York Stock Exchange listed, went public in May of 2014. We currently have 22 vessels on the water. 21 of them are ones we own. One is chartered in. We just sold one of our vessels at a firm price. Obviously, are committed to returning capital and optimizing our fleet as we see fit. From a technology perspective, we have scrubbers on 12 of our vessels, and I think Greg's going to get into that a bit later. But an investment I'd say generally we've been pretty happy with thus far, both financially and environmentally. That's it.
Thanks, guys. So I'm Charles. I'm the CEO of BWEK Kosan. We're the owners and operators, and I'm going to use the same phrase, the world's largest fleet of LPG and specialty gas carriers, with a fleet of 77 vessels of up to 12,000 cubic meter. So the twist there is that the ships are smaller than the fleet of my colleagues here today at Dorian and BWLPG in size. But we have 77 of those vessels on the water. We're trading primarily in the delivery of LPG over the last mile for use as cleaner energy in the residential and domestic sectors for heating and cooking gas, that kind of thing, and also for LPG as a marine fuel. But we're also involved in the movement of specialty gases such as propylene, ethylene, crude C4, VCM. A number of our vessels can also carry ammonia or be modified to carriage of CO2. The ships trade globally, often for oil majors and large multinational companies. We're headquartered in Singapore and listed in Oslo. Thank you.
All right, perfect. Thank you guys for those intros. The format today will be pretty similar to the other panels from the conference. I thought about making it into a Jeopardy style game without telling any of you guys, but ultimately decided against it, probably for the best. Now, I will be proposing some questions and some talking points, and really just allowing our panelists to enlighten us with their knowledge and wisdom on the matters. So let's jump right in. And Anders, let's start with you, and then we can go to Ted and Charles. You can weigh in after Anders' answer. Let everybody get a chance to touch on each topic. So let's start high level and talk about global trade. Obviously, very topical right now. It seems like everybody across all industries is really dealing with crowded ports, supply chain constraints, higher input costs, you name it. So how has the friction in global trade, particularly in what we're seeing in the container ship market, ultimately affected the LPG market? You know, anything from traffic in canals and ports to material shortages, complicating dry docks, repairs, new builds, et cetera. What have you guys been dealing with, and what are you seeing now?
Well, I think for us at LPG, early this year we saw quite great inefficiencies. Mainly due to the Panama Canal, but also dry dockings. We had rates in excess of $100,000. So at that time we saw the real effect of a special Panama Canal. Today we're still seeing inefficiencies, and we're still seeing delays. We're having still problems with the crew changes and so forth. But we're not having the same issues in the Panama Canal that we had. And I think when it comes to really the container ships, I think we're seeing more of the congestion really both in the Far East and also perhaps off the coast of California. So today the Panama Canal, and which is of course affecting us the most, is not really that big of an issue. But again, I think that could change quite quickly. And obviously for us also, I think on let's call it this energy crunch we're seeing, and also the transport friction, even though there's great demand, underlying demand and good supplies and so forth, we are also affected by the high prices. And given the high prices and the low inventories, we're not getting, of course, the rates that we would like to see. And so I think that's where we are sort of feeling the pain right now. Obviously, we think things could change. We think again you will see more congestion in the Panama Canal and so forth. But I think the answer is that we're not so much feeling the pain given from the container ships.
Okay, thank you. And Ted, would you like to weigh in on what Dorian is seeing?
Yeah, I think not surprisingly, pretty much identical to what Anders said. I'd say, like all of us, when you have various chats with people, they say, "Oh, I've read all about what's happening in California." Well, as our panelists know, but maybe the broader audience doesn't know, there are no VLGC ports in California, so we're not disporting there. And thus far, the only place on the West, well, there's two places on the West Coast, one in Canada and one in Washington. And as far as I know, we haven't really seen any delays there. But look, I think it's from an industry perspective, Anders rightly pointed it out. Crew changes continue to be a hassle. And I think all of us know that our seafarers all suffered quite a bit during this crisis, and it's been underappreciated by the broader world. I think our industry has done a decent job, but I really hope that if somebody's listening to this panel, they will help us alleviate some of the crew changes. We're all back down to, I think, probably to normal levels, but still, we've got guys and women who are missing important events at home because ports randomly change entry requirements. And so we'd really like to see that alleviated. We can help these folks.
Okay, great. And Charles?
Yeah, hi guys. I think I just cut out there. Apologies. On the smaller ships, yeah, I mean, I think, Ted, I missed a few seconds of what you said, but I think you've probably covered the cost side. On the revenue side, we've seen a number of themes because of the sort of disruption of the last couple of last year. The ultimate end user demand for LPG gas, for the gas that we're carrying, which is for the heating and cooking residential use, has been quite robust because it's been a sort of stay-at-home environment with people encouraged to stay at home and use gas and government subsidies and so on for that. But the source of the supply has been the volatile side. Where's it been coming from? And there's obviously been some disruptions on US Gulf exports earlier on in the year, pricing as well. And then in Europe, for instance, where refined gas is the main source, there's been reduced refinery run rates, which has reduced the source of the gas from there. So we've seen quite a volatile time on where the gas has been coming from. and that's been leading us to have to reallocate ships into different marketplaces and so on. But ultimately, demand has been strong, supply has been stabilizing, and the peaks and troughs in those regional demands have gradually been becoming less and less, and we've been building back up to a steady state.
Great. Okay. Well, that's actually a really good segue into our next topic. I want to talk about exports and ultimately NGL supply. So Charles, let's start with you and talk about the U.S. U.S. exports have accounted for almost half of global seaborne trade, at least halfway through the year. How has that trended since the end of Q2 and why? And then how do you expect it to continue trending through the end of the year and into 2022?
Yeah, so I mean, if we just look at the global LPG seaborne trade briefly, they're expected to increase by about 5% this year, up to around about 110, 111 million tons. And then the US exports have been increasing at a higher rate than 5% throughout the year, and we expect that to continue. So we're seeing the US capturing global share of the the global seaborne trade. And we think that will continue through 2022 and 2023. There will be growth in markets from, say, the Middle East, but we don't think it'll be as material as the volumes coming out of North America.
Okay, and Ted and Anders, anything you want to add to that, to the U.S. before we move on to the Middle East?
I can add. I think it is important what Charles is saying, and I think also we see the capacity being built. So I think again the supply from the U.S. is not going to be an issue. Of course, we don't want another extreme cold winter as we had last year. That will certainly again make it more difficult for us. But I think overall, I think we're quite optimistic about the volumes from the U.S.
Yeah, I'd say I agree with all that. I think the big question mark that I think we all have is inventory levels in the U.S. are probably lower than any of us would like. So, and I think we share everybody's optimism. The U.S. has historically been very responsive to world needs and world demand. So we'd expect, like everyone else, that those inventories will increase. There'll be plenty of export volumes as well as drive to meet U.S. demand, but it is a little bit of a question mark right now. It's only fair to say.
Right. Okay. Well, let's talk about the Middle East, and let's stay with you, Ted. So, how does the recovery there ultimately affect ton-mile demand? Is it all incremental as OPEC pares back some of its production cuts, or does it kind of take away from some of the longer haul trades out of the U.S. Gulf?
I guess it's in the near term, it could theoretically take away a little bit, but I don't actually think that'll happen in practice because, some of the supply chain disruptions we've been talking about have just created inefficiency across the supply chain. And so that's lengthened the fleet some. And I think over time, what we've historically seen is that, that incremental ton of LPG gets sold. Typically, we expect to see that in the petchem markets. That's obviously dependent on naphtha price movements. But as oil stays high, that affects, even though that sort of has a bit of a negative effect on the LPG naphtha arb. Over time, it does put pressure on the naphtha, on the propylene margins from the steam crackers, and so that will open the door for PDH guys to make more money, which in turn would increase LPG exports. So it's kind of a long-winded way of saying that I think over the medium term, probably even over the short term, it's all incremental. It's all good news.
Okay, yeah, that certainly makes sense. Anders or Charles, anything you want to add to that answer?
I would just say it's all increasing supply of product. It's not supplementary, so it's all positive. Yeah. It's all extra miles to move. And from a smaller ship point of view, we're seeing good growth out of Iraq and Oman, where you're looking at 40, 50 to even 100% growth year on year in export volumes. And that's all good incremental demand for the vessels in our sector.
I agree with that. I think again the underlying demand is quite good. So I think we expect a slight pickup in volumes in the Middle East. I think it's going to be too hard to be disciplined with the oil prices and gas prices where they are.
All right. Okay. One more question on exports, and this is maybe kind of an off the wall question, but Just thinking about the kind of weather and the storms that we've seen in the U.S. Gulf, both cold and hurricane related, maybe not as much an increase in frequency, but certainly it seems like, the power and ultimate level of disruption has increased. Can you walk us through how you guys prepare for hurricane season? If there's anything at all that you do in terms of positioning, and give us an update on where LPG export infrastructure in the Gulf stands right now. This is for anybody.
I'd say, LPG infrastructure in the Gulf, is generally pretty fine. I won't say it was completely unaffected, but, everything's pretty much back up and running. I mean, these are world-class operators, not their first time. They keep me pretty far away from maritime operations with good reason, but I do follow it. And look, I think with all the early warning systems and everything else, you're able to position your ships, safely out of harm's way. Either you delay arrival in sort of the danger zone, or you hustle your way out, or you find a safe place to anchor, typically way offshore. Sometimes there's inlets and whatnot. But Charles or Anders may have a better answer than that.
No, I think that's very true. I think actually you're actually right. I think if our business dries up, we can join as a weather forecasters on TV.
Yeah. Well said.
Okay, great. So let's move on to let's talk about vessel supply. Anders, let's start with you and talk about the order book. If you look at it right now, the VLGC order book, there's substantial deliveries slotted for 2023. Simple question, really, is this a classic example of shipping markets in general, and with the tendency to over order after a solid year of earnings? Or is there something else at play there?
Well, I wish I could just say that this time is different. I've heard that many times before, both while I've been in the business and before. I think the order book, it is challenging. It's around 28% right now. It is a challenge. It's clear that we need a healthy market to absorb this, the new capacity. At the same time, I think many of the new builds we're seeing, they are a function of preparing for new regulations coming, and I think so that's quite understandable. I think perhaps we also at BWLPG, given that our commitment to retrofitting 15 of our ships and starting this process, I think that's also probably stimulated some of our colleagues and competitors to also want to make sure they at least have some exposure to the latest technology. Yes, I am concerned, and I'm concerned certainly if it continues to grow. At the same time, we also, and at BWLPG, we're normally very conservative about scrapping, but of course we are getting to a point now where there are a lot of old ships out there, and although there are some alternative uses, I expect that we will see some ship owners being forced to make some decisions over the next year or two.
Okay, Ted, anything to add?
Yeah, I just add a couple data points. Nobody likes to see an increase in order book. Fortunately, this order book is a lot less than we were at the peak in 2014, 2015. But Anders is 100% right about the potential impact of environmental regulations. So EEXI kicks in January 2023. And, the global fleet is all going to have to slow down from, 1 knot, 2 knots, 3 knots, whatever it's going to be, but it will increase some length in the fleet. And then on top of that, as he points out, the age of the fleet, I think there are 30 ships over 25 years of age right now, another 17, let's call it, that are between 20 and 25. And so they aren't really in the markets. They aren't necessarily in the addressable market that Dorian and BW or any of the owners of more modern tonnage typically face, but you need to be mindful of it. But we would expect to see some of those vessels scrapped. And remember, environmental regulations are only getting more stringent, so capital investments can become a bigger issue. Those older ships are smaller cubic carrying capacity and less fuel efficient, so there is good economic reason to expect to see hopefully some some scrapping. Again, you can never count on it, but I think we share our colleagues' view with BW that we do expect to see some. And I guess in terms of the market growth, we understand that the projects on the books right now for PDH in China alone are going to incremental demand of 18 million metric tons. So sort of on the rough math that it takes four VLGCs to move 1 million metric tons. That's 72 VLGCs, which is roughly the current order book. Now that demand won't be fully ramped until 2025. But there continues to be good organic growth in LPG globally because of its wonderful environmental properties. So, as Anders said, I'd love to say this time is different. I hope it won't be as rough on the downside as we've seen, because there are some mitigants, but nobody likes a 25% order book.
Right.
But Greg, I'm not going to give up, encouraging, my colleagues to retrofit rather than build new. I still think that's it's a great way to do it. It's both from a carbon footprint point of view and a cost point of view. So I'll continue to give that message.
Well said. Well said. Charles, any comments on the order book before we move on?
Yeah, sure. I mean, on the smaller sector, we've got about 1 to 2% fleet growth in each of the next few years. So it's a lot less than the larger vessels. And scrapping, there's a scrapping pool of about 23, 24 ships over the age of 30. The smaller ships tend to last to about 30. And as Ted said, you don't necessarily compete with those 23 ships day to day, so they're not necessarily in your market already. But when they go, they get replaced by ships that are in your marketplace now, because people scrap those ships and then they buy the slightly younger ships. And so it's all positive if those ships are scrapped, and they will be scrapped. We are seeing them going, even though rates are higher, asset prices are moving up. The older ships are still getting scrapped. So I think that's heading in the right direction. And then when it comes to what type of ship do you order in the future, I'm sure you've already discussed the technical specifications are slowing everybody down, and then the pricing is only going up.
Right. Okay, so along those lines, let's talk about a little bit of scrapping and ultimately the maintenance schedule. And Charles, we'll stay with you. So what are you seeing in terms of the global fleet maintenance schedule right now, which was expected to increase materially in the second half of this year, following really a confluence of events with the heavier delivery schedule 5 or 6 years ago, coming up for 5-year special survey, and then some deferrals last year in the stronger rate environment. I think it was adding up for a heavy maintenance schedule in the second half of this year. So Charles, what are you seeing along those lines?
Yeah, that's all. It's all happening, and the shipyards are busy, and then at the same time, you've got the ballast water treatment work, the scrubber work, the retrofit work on top of that, which extends your dry dock period, and then on top of that, you have COVID and quarantine delays, delays in delivery of spare parts, supplies to the shipyards because of COVID. And then the ships themselves, or the shipyards, can often get shut due to COVID. We've had situations this year where we've had a ship arrive off a shipyard just as the government has shut it because of COVID concerns, and then we've had to obviously take the ship somewhere else, so you lose 2 or 3 weeks. And then we've also had ships in a shipyard when the government has shut the shipyard due to COVID concerns, and then we've lost a week or so while that process is worked through and sorted out, and the shipyard gets permission to reopen again. So I mean, we would say that between just looking at our own fleet and time lost and delays in shipyards, we're looking at 1 or 2% delay to the global fleet just from this impact.
Right. Ted, Anders, anything you want to add to that?
Charles covered it perfectly.
Okay, that's great. All right, so we'll move right along. And actually, along those lines, let's skip ahead and talk about labor, because you kind of touched on it a little bit with delays in the shipyards. And we've kind of seen this across different industries, and at least from what I've seen, it kind of varies depending on the industry and also within each vertical within each industry. Talking about labor constraints as a result of COVID and other things. So over the past 18 months, and particularly recently, what have you guys seen in terms of labor constraints on board and on shore, and then specifically in those shipyards? How much have labor shortages and constraints contributed to delays and extended construction timelines? Anders, let's start with you talking about the VLGC market.
Yes, so I think clearly we have seen, as Charles also said, we've seen quite a few situations where we had delays. Of course we had a retrofit program, and although that's been done pretty much on budget and schedule, but still there has been many situations where we had to really scramble and so forth. And of course I don't have the number in front of me, but I just someone showed me the number of quarantine days we've had in China. Just for people. I mean, it's just amazing. And also, of course, as we all know, we still have the problems of changing crews. We think, here, certainly in Oslo, the market is, the world's opened up again, and we think, we're back to normal. It's not back to normal in the Philippines or in India or in many other places. And so this is, our crew team here has really been the managing team has been working day and night to try to find solutions, and we still see that's our greatest challenge. So I wouldn't say that we've been severely hit, or certainly not worse than anybody else, but the number of days and the number of challenges we've had, and then the number of decisions we've had to make, and of course that also means we I really commend all our seafarers, as Ted was saying earlier. They've really been through just a really tough time, and of course this also means that we have to really find ways to care for our crew, and we have to, of course, it's going to cost us a little extra, but that's a good investment. So I think overall, yes, we felt the pain. We're still feeling the pain. We're not out of this yet.
Ted, anything you want to add?
No, that pretty much is exactly our experience.
Yeah,
we're not out of the woods.
Yeah, it's going to have a tail, because even if we're vaccinating the seafarers and they are eventually all vaccinated for us, we think that's going to take through till next spring before we've got to a significant high level, because it's a lot harder to vaccinate the seafarers on the routes where our ships trade. But even after that, a seafarer will still catch COVID, and a port state may still ask the ship to quarantine. So there's going to be a tail to this, and it's going to carry on for a while.
Right. Okay, those are all great answers. So let's jump to perhaps maybe the most interesting topic of the panel, I think, and that's talking about LPG as a fuel and other types of emission solutions as we kind of look out over the next 5, 10, 15 years. And specifically on LPG as a fuel, and Anders, we'll start with you. I think most LPG owners have pretty much wrap their arms around using LPG as a fuel for their own ships. And I think that order book that we are talking about, correct me if I'm wrong, but I think it's almost entirely, if not 100% LPG dual fuel engines. But maybe if we look at outside of the LPG shipping market and look at the prospects for LPG as a fuel, where does it seem to rank versus LNG and other potential longer term alternatives? We could even talk about hydrogen, methanol, ammonia, batteries, etc. What are your thoughts there?
Well, the simple answer, it ranks too low, but let me fill in a little bit more. I mean, and also, by the way, I think we're probably going to 70 or 80% of the order book is with dual fuel. There's still some conventional fuel ships also, but I mean, LPG I think is a great transition fuel. And I think the world is going to wake up to this when we see in the energy crunch we're seeing right now. I think gas has a future, and I think LPG certainly has a future also. I mean, it's readily available, as we talked about, and it's going to be more available as infrastructure is built out and that's in place. You can have S2S transfer. I mean, with our colleagues at the EPIC, we're showing that we can do that already. And I think also the switching is easy. So I think it is really potentially a great fuel. Of course, we have to remember that LPG was sort of the unwanted child, and it's been and you know, we're still kind of down on the hierarchy there, you know, quite low. I can still tell that, you know, when people talk about gas, it's LNG and it's LNG fuels, and I'm trying to you know, influence some of these influencers and tell them, you know, you really need to focus on LPG. It really works, and I think we're demonstrating it works. And so but when you look at comparing to, of course, LNG, yes, it's still an alternative. It's not always readily available, and of course, with I'm not gonna we have in our sister companies, we have, you know, many LNG people, and they will not be happy if I talk too much about the methane slip, but I mean, it's an issue, and of course, and we see also that more and more people are focusing on that. So I would hope that some of the focus on gas goes from LNG to LPG, because I think LPG really has some benefits that are just really outstanding. And but the answer is we have not seen much of it today from other segments, and I think we have a job to do as an industry. So I think to promote it and to try to really find the right forest to discuss it and talk about it. And I do believe that over time, others will see also the benefit of LPG. Of course, for us, as you said, it's a you know, an easier decision, and again, obviously, we made the decision not to order new ships because we think it's, you know, it's quite uncertain what will be the next generation of fuels. Will ammonia be the next generation or the next solution? We don't know, but we certainly want to make sure that we are studying it and listening to what's happening there. But again, my answer is that it ought to be higher up on the list in many places.
Ted, anything you want to add there?
Yeah, I mean, I think a couple things I'd point out. You know, we obviously share a lot of what Anders says about LPG as a fuel and its environmental properties. I think probably one of the challenges for broader adoption is, aside from the fact that we are the unwanted stepchild, as Anders rightly said. You know, there are 110 VLGC capable ports in the world or thereabouts, maybe a few more, and probably I know a lot more in Charles's size sector. But you know, if ships aren't going, I mean, for example, we were just talking about Long Beach. There's really you'd have to build a lot of infrastructure, and the environmental lobby would be really unhappy if you were to start building additional LPG bunkering facilities in California. So that's something we will have to address as an industry to see broader uptake across sectors. I think some of the other technologies that are out there are really fascinating. Before we even get into alternative sources of propulsion, like, you know, methane, ammonia, and all those good things, there's some really nice things out there that are really supplementary regardless. And so, you know, batteries are interesting. We've got to see where that goes. You know, a lot of questions, but a lot of work being done in the sector. I think all of us are investing a lot more in systems to improve, you know, just the overall efficiency of our fleet. So, you know, our vessels actually puke out a lot of data, and we're actually capturing it all now, and you know, able to make some more timely operating decisions about hull cleaning, propeller cleaning, and all that kind of stuff. Advances in paints. I mean, there's some fairly pedestrian stuff that's actually adding a lot to overall fuel efficiency. But I think LPG should have a more prominent place. Yeah, we're talking our own book because right now there is almost zero LPG bunkering activity, but it could grow our global seaborne market not inconsequentially if you kind of work through the math. So love to see it.
Yeah. And Charles, how about for smaller class vessels? What are you saying there?
Yeah, but I mean, I would say that any future fuel is going to require massive investment in its infrastructure for supply and delivery. Doesn't matter what it is, it's going to require massive investment. So, and I think LPG is already here, it's already with us, and it can already be delivered to a ship anywhere in the world, because one of our ships can do that. And we've got 70 of them on the water. We're doing on average one ship-to-ship operation every day of the year already. So it's not a unique or unusual operation. We can do ship-to-ship operations very simply, very easily. We can see that there's an easy path to supply LPG to many more ships in many more parts of the world. So we can do that. When it comes to the adoption by the smaller ships, as the larger ships now, the majority of the new orders being placed today are dual fuel on the smaller ships. There is a legacy order book with traditional fuels and so on, and it will be dual fuel LPG. So there will be further growth in the use of LPG as a fuel within our sector, and it is a no-brainer for us because we're loading in LPG ports or discharging in LPG ports, and the cargo tank actually becomes an optional fuel tank, and the fuel tank becomes an optional cargo tank. You do have that arbitrage you can play, which is of interest to customers sometimes as well as to the ship owner.
Right. Well, on the other side of the coin, if we talk about scrubbers, and Ted, I think you alluded to it, so we'll start with you. And it's kind of a two-pronged question, asking about your vessels that currently have scrubbers and your vessels that do not currently have scrubbers, and for the other panelists, your vessels that do not have scrubbers. What are you seeing on fuel spreads right now? And what are your updated expectations on your payback period for that investment after what has been a pretty complicated and volatile 2020? So that's one. And then two, for your vessels without scrubbers, what was the ultimate determining factor in that decision? If we take a walk down memory lane, and if you could go back in time, would you do anything differently in 2018, 2019, when this was the only thing to talk about?
So on the first point, we're seeing about $100 a metric ton spread, VLSFO versus HSFO. The forward spreads are like that. So basis that, we'd expect to see about a 2.5-year payback, and that's from the date of installation, not from today. So obviously, the regs kicked in 1/1/20 and the spreads were this wide, and then COVID kicked in and the spreads went to nothing. So from our perspective, we're happy with the investment. Very happy with the investment, quite honestly. Look, we did a lot of thinking and debating and probably too much math and modeling when it came down to it on the whole decision. And then we finally said, you know what, we just got to do a hedge. So our crude hedge was, it could have been 11, it could have been 12. We did 12 ships, which was a little more than half our fleet. So was it a brilliant, super quantitative hedging strategy? Well, sort of in its own weird way, but we said that was good, and I think I'm not sure I'd go back and change anything, notwithstanding the good results we've had, because we don't know what's around the corner. We know LPG is a thing, and at the time that we were making the decision, we consciously kept ships free because of the potential for LPG retrofits. And I don't think we changed that. I think one important thing in shipping is maintaining optionality. And so whether that's on your balance sheet or in your operations or in your technology investments, I think it's important. So probably wouldn't change anything.
Great. Anders, over to you. Can you walk us through your decision-making process with that over the last, call it 3 years?
Yes, I mean, I think again, as Ted says, it's you try to sort of take a balanced approach. You don't want to go all in one way or the other. And I think the discussion we had, we said again we will look at some scrubbers. We started, of course, to work with the LPG technology or the dual fuel technology, and spend quite a bit of resource on that. I think and starting making decision on a few, and then we sort of liked both the financial prospects, was also looking at the requirements coming from IMO and others that this is something we should do, and obviously there were times when the spreads were much more in our favor, and then we had great paybacks of 3, 4, 5 years. That's not the case today when you look at the spreads. Obviously, I think we have an abnormal spread between LPG and the underlying conventional fuels. And so the forward curve still pointing to that we should get a nice premium in the next few years. But I've lived long enough, and I think you make decisions and you live with those. And I think as an organization we're quite happy. We think also we're developing some great skills for understanding how this is working, and although we don't know what the future is going to bring, we think at least LPG has a good runway as a fuel, and so we think we're building some competence that is very, very valuable for our organization.
Okay. And Charles, how has BWEK navigated those decisions over the past few years?
Yeah, I mean, it's a very, very different mathematical spreadsheet. The smaller ships, they burn less fuel. So you've got less of the sort of the maths, if you like, in order to the volume of the fuel to make the math add up to cover the cost of the scrubber. We're also at sea less time. We're in port about half of the time on average, because we're carrying product over shorter distances. You know, we'll be in port every 6 days on average, whereas a bigger ship will be every 24 days. So not only do our ships burn less fuel every day, but they spend less days at sea burning that fuel. So you end up with a payback period, which, well, say you define it as 5 years, you need over $200 differential in the pricing, even on our largest ship. And then also, if you then wind back to what was 2020, that was the global rollout of low sulfur. Most of our ships trade on the coast intra-regions, and we were already trading a lot of the ships in environments where there were already pre-2020 low sulfur requirements. A lot of our ships were already on low sulfur. So it's a very different calculation to make. When we look at new builds now, and you fit the equipment in a shipyard on a new ship, completely different math. It could add up. It probably should happen.
Right. Okay. Well, we're winding down here, but we still have a few minutes left. So I want to give all of our panelists a chance to give some closing remarks. So, you know, anything we didn't cover, anything you want our audience to take away from this call, take a minute or so. Honors, we can begin with you, and then go Ted and Charles. Closing remarks. The floor is yours. Go ahead.
Thank you. I mean, I think we covered some of the key issues facing us. I think we have an order book that we need to address. We have a product that we think is great. It's great for many places. We haven't talked much about that, but you know, again, LPG as a fuel, and we invest quite heavily in India at the moment. We see the benefits to, you know, countries like that. So, and again, I think the point I would like to leave with is that and especially in the situation we see in the world right now, gas, I think, has a meaningful place for a long time. And I think, you know, as LPG, ship owners and operators, I think we also have an important role to play. And I'm happy that you know, there's more of us that can make sure that this happens.
Okay, Ted.
Yeah, I think I'd echo Anders heavily. Look, LPG is a product. I think we all are, you know, very proud of our company, so we won't go into that. But I do think we're all very proud of the product we ship. LPG, I don't think, gets quite enough credit for its for being a bridge fuel. Everybody knows that we're working hard towards a carbon-free or a net carbon zero future. LPG is a big part of that. You know, when you look at, more importantly, the sustainability and social piece that LPG is contributing to, I don't know how many lives have been saved or lengthened by people converting from burning biomass to burning consuming LPG. Their quality of life's improved. It's a great product, and so, you know, 55% of world LPG goes into heating and cooking. That demand doesn't go away. We've seen steady growth as we've seen population growth, you know, sort of support that. Yeah, we lose a little bit to LNG over time, but nonetheless, it's a phenomenal product that has really changed lives and should continue to grow. And so therefore that sets up very well for all of our businesses. So, you know, we think LPG should have a prominent space in any discussion about getting to zero. And, you know, we hope that others will see it that way too.
Okay, great. Charles?
Yeah, I mean, Ted mentioned 55%, and actually 55% of what we actually carry on our fleet is LPG for developing economies for heating and cooking. So you know, we've got the metric, and I think with, you know, modest fleet growth, about 1% in our sector, demand growth of 5% for LPG over the next few years each year, we would expect a improving freight market environment. It's an exciting time. It's a volatile time, but it's an exciting time, and I agree. Cleaner energy. We have a future.
Okay, awesome. Well, I think that's about all the time we have for today. So I'd like to thank our panelists for their time, our audience for joining us, and a special thank you to Nicholas Bornozis and the Capital Link team for putting this all together. and having me on as a moderator, quite frankly, very thankful. I'm sure putting this event together in the new virtual world was no small feat. So thank you all very much. If you have any questions, comments, concerns, you can reach me via email at greg.wasikowski@weberresearch.com. You can also visit our website at weberresearch.com for more info on what it is that we do and some additional contact information. So I hope everyone has a nice rest of their day, and I think I'll kick it back to Nicholas. Thank you again.
Well, all I want to say is thank you very much. That's a great panel, and frankly, I'm delighted that we have such a high-power panel, as evidenced by the great attendance we had, because it is very important to highlight the expanding role of LPG as a cargo and as a propulsion fuel. So it's really wonderful that this panel did exactly that. So thank you very much, and thank you, Greg, for moderating. And we look forward to the next one. Thank you very much.
All right.
Thank you.
See you next time.
Thank you all.